Welcome back. Shares of Occidental Petroleum, as you can see on your screen, they're trading fractionally lower. This comes after a miss on both its top and bottom lines in the company's fourth quarter earnings release. Now, while the company announces a $3 billion buyback share repurchase program, we have, for more results about the company, Stewart Glickman, CFRA Energy Equity Analyst and Deputy Research Director. Thank you for joining us here, Stewart. Great to see you. What's your takeaway from these Oxy earnings? Looks like a little bit light on some of the fourth quarter numbers that we were looking at, but what about the guidance?
Hi, Jared. Right. So thanks for having me. So you're right. Fourth quarter numbers a little bit lighter than we had expected, lighter than consensus. I think the big picture takeaway is that the operating cash flows that this company is generating is still pretty impressive. And that is leading to spending on things like the buyback program. The capex for next year is probably going to be higher than in 2023 than it was in 2022. And I think we're going to learn on the earnings call tomorrow. What some of the key priority areas are going to be for 2023, which I think is going to include certainly boost in production, probably somewhere low single digits would be my best guess. And then also probably some spending on infrastructure. But I think the big issue for tomorrow is going to be, how much of a capex increase is likely to be coming, how much of that is really organic activity versus cost inflation. And we've seen from some of Oxy's peers that have reported recently, when you put out a number with a fairly significant capex increase, the stocks have had their hands slapped by the market. So I think that's going to be interesting to see.
Yeah, Stewart, that is a huge focus in this report, or really what we will likely learn on the earnings call tomorrow morning. From an analyst perspective, obviously you've covered the stock now for quite some time. What are you expecting to see on that front, and how big of a headwind do you potentially see that being for Occidental Petroleum, at least in the near term?
Well, it's a good question. So to put it in context, I think the average E&P next year is probably going to be spent somewhere in the neighborhood of 15% more 2023 on 2022. So the ones that have stood out, I would say, are EOG and Devon so far this year. EOG, for example, just last Friday talked about a capex increase that was around 20% to 25% higher in 2023. And their stock took a hit following that news. I think in Oxy's case, let's put this in a little bit of context. They had a tremendous year in 2022. The stock hasn't done all that great so far in 2023, but when you're up over 100% in 1 year, you might be forgiven a little bit for some settling, I guess, in the stock. And I still think that the outlook is fairly positive for Oxy. I think that the amount of free cash flow that they're probably going to generate is still going to be pretty strong, unless the capex budget with cost inflation that's baked in is so out of control that really sort of pulls in the sails on free cash flow. But I don't expect that that's going to happen. Oxy is one of the major producers in the Permian Basin. That's really kind of the nerve center for U.S. oil production in general. They have their own midstream assets, which is nice to have when midstream becomes constrained. They're starting efforts on carbon capture sequestration, which probably has legs to it just because of the ESG crowd. So I think there's a lot of things that point
Stewart,
in Oxy's favor.
We just had Warren Buffett, Berkshire Hathaway's annual shareholder letter released over the weekend here. And I'm just wondering, this is a huge Buffett play, got back into energy in a big way a few years ago with Occidental Petroleum. That was right around the time that they were taking over Anadarko Petroleum, which was a highly criticized deal because it was deemed expensive at the time. Buffett loaned some money, or Berkshire loaned them some money. Just wondering how we stand here with Occidental and Berkshire's interest. Do you think there's ever going to be a full takeover, or just what do you see the dynamics here?
So it's a really interesting question, Jared. At the time of that deal, where Warren Buffett helped enable Occidental to purchase Anadarko, I really hated the deal. I thought that it was not shareholder friendly. I thought it was expensive. And credit to Vicky Holub, but the last couple of years, particularly 2022, they have really been able to make this kind of a transformative move. They've paid down a lot of the incremental debt that they took on to make this purchase. They're materially bigger in size in the U.S. If oil prices are able to sustain themselves at relatively high levels, and by that I mean, let's say call it $70 a barrel or higher, which I think there's a very good chance of that happening because the industry has been so capital starved for so long. I think all of those are pluses. Now, Warren Buffett already has significant exposure to Oxy by virtue of the preferred shares that he owns, which are going to throw off 8% dividends every year, by virtue of the warrants that he will be able to exercise once the preferreds are retired, which will come, I think, at the latest in 10 years' time. So he already has exposure to the fortunes of Oxy. Whether he actually chooses to go ahead and purchase more of it, I think certainly remains to be seen. But he has a pretty significant stake at this point already. And I think that he's thinking longer term as well, and that the prospects for Oxy as one of the big workhorses in U.S. oil, in U.S. shale, I think makes a lot of sense.
All right, we can see shares off just about 0.8% in extended trading. Stewart Glickman, great to have you. Thanks so much.
Thank you.